How AI hardware fits together. One simple chain, AI companies spend money, factories build memory and networking parts, data center buy them, supplier revenue changes, and estimate and stocks react. So AI spending, chips memory, fast networking, revenue, and stock reaction. So DRAM, HBM, and WPM. DRAM is the broad family of fast working memory used in servers, PCs, and phone. So a GPU calculates memory, keeps feeding it data fast enough to stay busy. HBM, high bandwidth memory, DRAM chips stacked vertically and placed beside an AI GPU. It feeds the GPU much faster, but it uses more silicon and it's harder to manufacture. So WPM is wafer per month, a factory capacity measure. More wafer starts usually mean more potential chip, but a yield, chip size, and product mix decide the final output. So investor translation, physical signal, HBM allocation, wafer capacity, yield and shipment, money signal contract, prices and gross margin, names Micron, SK Hynix, and Samsung. So do not confuse a spot price spike with immediate profit. Large customers buy through negotiated contract. It's actually super opaque what we can see in the AI. So what do 800G and 1.60 mean? That's some things we're going to see later as well. So I rather explain all the terms in advance. So an AI cluster contains thousands of GPUs constantly exchanging data. And electrical signal weaken over distance. So optical module turns electricity into light and send it through fiber, then turn it back into electricity. So a GPU, you get a switch, then it goes into a 800G or a 1.6T optics, then fiber and more GPU. So 800G moves up to 800 gigabits per second, gigabits, yeah, and 1.6T double that to 1.6 terabytes per second. More AI compute creates more traffic, which can require faster link. So they're basically the data road speed limits, not a version of AI chip. So that's also one port that is important because AI is not only a GPU thing. There's all the parts that like bottlenecks that will go through the GPU. So the physical signal, we have model shipments, qualification and production capacity, money signals, revenue by product generation and margin, and names you have coherent, light, fabric, and apply optoelectronics. So do not confuse being named on the supplier map with winning a paying customer. Okay, that's like the main thing that we have. So how to break the memory supercycle, or is it even possible? So that's like there was like those guys like doing the analysis. We had basically Samsung, SK Hynix, Micron, and CXMC wafer per. I already forgot WPM, which was wafer per month, and Samsung can become the is the biggest one, and then tells you how much they can produce. So that's what is important. And then the thing is we have to understand that all the contracts, because to be able to buy those stocks or not, like you're going to understand how the contracts works and who's buying, who is selling it. Well, the thing is we can't know in advance because it's all negotiated behind closed doors, and it depends about like how long you stay in it, how good looking you are, all those factors in to be able to get yours out of it or not. So we see that the 1.6T, they're actually not contracted. Instead, it's the 800G demand that has been increasing significantly compared with previous expectation. So the most important takeaway, that's the whole 800G demand revision, also a longer tail demand, which is a bullish read through on US trends receiver, makes like IOI, blah, blah, blah. I'm not going to pronounce the stock name. You screenshot it, you post the video, I don't know. So a lot of newcomers like Neoclouds, AI model companies contributing overall to the demand rather than just hyperscalers. So diversification always a bonus, man. AI was supposed to make our life easier. I'm telling you, the more I read about investing into AI, the more I get headaches. This is tongue twisters, vocabulary that's impossible, and it's like I thought we just turn on the AI, it works, but there's a lot more to it, and the supply chain is actually super thin with only few actors and people who understand exactly how it works. There's plenty of opportunities and the movements are crazy. If you saw my video about Hyperliquid, you know that one of the highest traded stock in Hyperliquid, which is originally a crypto platform, and I'm becoming the house of finance, is SK Hynix, which is crazy. So we got to pay extra attention and understand what is going on. So CPO moving the optics to closer. So CPO puts optical parts beside the network switch chip to use less power and move more data. So today, many optical modules plug into the front of a switch. The electrical signal must travel from the switch chip across the board to the module at a very high speed. That distance wastes energy and becomes difficult. So the co-packaged optics CPO move the optical engine and next to the switch chip. It may improve bandwidth and power efficiency, but manufacturing, servicing, and supply chain coordination are harder. So the investor's translation is like CPO is potentially important, but it may take years to become a large revenue. So ask, is qualified product, name customer, shipment date, and segment revenue. So the key distinction is that 800G and 1.6T are pluggable, can grow now, while CPO remains a future architecture. So then Morgan Stanley note on CPO key participants included Side Cohort Light. I'm probably going to try to give you a report of all those companies into one. We see how we can tool that. That could be a way. And so Morgan Stanley validated the research on Cybe, a small 1.5 billion laser company next to two leading one. Okay, so we have those things. Chinese players do not have yet 300G EMLS and are quite far from having CPO laser. So there's this thing that will help to get alpha. So we got to save those companies. Now, of course, like you see, there are a lot of people that are talking. So then you have the WFE, the machines behind the chips. WFE companies sells the equipment used to manufacture semiconductors. So wafer fabrication equipment includes lithography, deposition, etching, cleaning, inspection, and metrology tools. If memory makers must add capacity, they spend money on these machines before new wafers appear. So ASML, Applied Materials, Lam Research, KLA, and Tokyo Electron. So the investor's translation, WFE can benefit from a capacity raise even before every new memory chip is sold. But orders are cyclical. Export control matter and customers can delay fabs. So what we watch, memory capex, tool lead times, and China restriction and order backlog. That are the one that we need to be careful of. And we have, again, Morgan Stanley just modeled the US hyperscaler capex hitting 1.2 trillion by 2027 and 1.4 trillion by 2028. So easy for me to stay directionally bullish. The thing that we talk about, like, oh, AI is a bubble. The goal is like that we should not be the guys thinking that it's a bubble. Like, at no point in time we've been the best trader in history. So at no point in time we should think we are right. And if we were investing the opposite of what we think, we probably would be better off most of the time. Like, I've been sidelined on a lot of AI plays thinking like, oh, that's already the top. That's already the top. Even I called my dad, and then when he was telling me that they think the stock is the top, I was like, oh, okay, like now it's probably a time to invest, because there's no way we all think it's a bubble and it's the top. Like, guys, we have to remember at the end of the day, we've been meme coin traders. Like, at what point we're the smartest people in the world? I don't know. But anyways, so the hyperscalers can't deploy this much capex on all their own footprint. So not enough power, not enough permitted sites, not enough construction capacity, not enough grid interconnection. So they say to force them to spill capacity to specialized operators like all the stocks, okay? And we have secure powers, anchor tenants, cost per megawatt, execution speed. So every Neocloud sits somewhere on the spectrum, and demand continue to exceed supply. I continue to accumulate good stuff during dips without leverage. So we had a lot of dips on those markets. We should pay attention to it. I'm not saying go deep into that, but like, look at that, minus 14%, minus 8%, minus 4%, a minus 1. Okay, what do we have here? Do we have another big one? Minus 7%. So of course, invest smartly. This is not financial advice. I can give dating advice, but I cannot give financial advice. Unfortunately, I'm not certified for that. So when can good AI news make a stock fall? So stock react to the difference between reality and expectation, not good or bad in isolation. So what happened? Demand grows 20%, market expected 10%. positive surprise, and we have something that grows. Demand grows 20%, market expected 30%, disappointment, it went down. Order rise, contracts, delay pricing, revenue may lag, revenue rises, margins do not, poor value capture, everything improves, valuation was extreme, stock can still fall. So our three questions, because we had some stocks that did their earning reports and it still went down. So the possible stock reaction is, we have our three questions, sorry. Physical, is demand actually improving? Capture, does the supplier turn into revenue and margin expectation? Is that better than what the market already priced? Because normally the market always priced everything. And only then do we decide whether it deserves deeper diligence. And the expectation gap alive lab, we did this last time to calculate those. And we expected some gap into the different ones. So for example, Micron, SK Hynix, and Samsung begin as teaching example. So the figures are illustrative here, but apparently we have a score of 4.5 on SK Hynix according to our model. So the physical gap is 7%, capture 72%, and confirmation. Don't quote me on this. I'm still learning those things, okay? And Micron is at 2.3 and Samsung is at minus 1.6. So now we gotta dig deeper into our tooling and we're gonna improve that. We may keep the pink, honestly, at some point. Like I may keep the pink like that we're doing. So the AI infrastructure value chain. Okay, so this is the diagram. I can actually copy it if you want into. Let me get that. All righty, that's basically everything we saw. So hyperscaler AI spending. We have the WFE and the chip factory machine, DRAM wafer, and HBM besides GPU. That's what we want. AI GPU accelerator, next will switch. So the future architecture will be CPO behind switch chip. So that's a longer time play. And that all require fiber. But for now, we use mostly 800G and 1.6T optical module. That's also fiber. So this one is like basically revising how they build the hardware. So supplier revenues and margin, earnings revision, and stock reaction. So there's a lot of places that are depending of how the things will evolve. Honestly, the closer you are to AI, the more you use AI. I'm like, we need to be on top of that because like today I cannot work without AI. I use it a lot, and I think still most of the people are way behind it. I see the usage, the way people think about AI is way behind. But now I tend to be early adopter. Like so, I was talking about Bitcoin really early on, 2016, 17. I talked about Hyperliquid really early on. So I know that there's delay between when I start to do something and when I do it. Same as the things that I did in Thailand and now it's very popular. No, I'm not going to talk about that. This is a joke. But this is what is happening on AI. So let me know which stocks you think is the best, honestly. Your research interests me. I want to know what is your opinion. I will read every single comment around that, even if you're a bot. But I will have to mute you. But let me know in the comments. And don't forget one thing, of course, like AI helps you. One thing that destroy my market is to stay handsome. So you can be now. Stay handsome. Ciao.